Hey everyone, I know that eventually there's going to come a day where I can release one of these videos and say, the market has gotten better. Unfortunately, that's not this video. Since February 19th, the market has dropped 31.94%. That's as of the close on Friday. Now, this is the fastest bear market in history, and now the word recession is being used. So before I talk about the market, I want to address the economy and why these two are not always tied together. First, there's no question that the instant shock to the economy has caused some deep damage, and that damage is probably going to be measured in the trillions of dollars. The uncertainty of how long this will last and how bad it will get is why the stock market has reacted so violently in the last month. I've said this a lot of times before, but uncertainty is the stock market's greatest enemy. And in absence of certain and very specific data, the market tends to price stocks for the worst case scenario, and that's what we're seeing right now. So you need to prepare yourself for the second wave of news. Once this medical crisis passes, the media is going to turn their attention to the economic crisis. And this is probably going to dominate the news and paint a pretty ugly picture. That's going to be unsettling for investors. And before that wave of news starts to dominate the headlines, I wanted to share two things about how the stock market typically behaves in a recession. First, the stock market doesn't always go down in a recession. These periods just aren't as scary as they sound. There have been 9 recessions since the 1950s. And if you measure from the time the recession begins until the time it ends, the stock market has delivered a positive return in 4 of those 9 recessions. Now, I'm not talking about a certain time period after the recession ends or anything like that. I'm talking about from the beginning of the recession to the end of the recession. The second thing is the market typically bottoms out before the recession ends and it starts moving higher. This has happened in every recession since 1980, and it's the perfect example of why you can't make investment decisions based on the news about the economy. To show you an example of this, let's look at the last recession that started in December of 2007 and ended in June of 2009. From the market high to the market low, the S&P 500 fell 56.8%. But on March 10th, 2009, the market turned and started going back up. Now, the economy was still in a recession. The news was still really bad. But in the midst of the recession and the bad news, the market started moving higher. And between March 10th and the end of June, which is when the recession officially ended, the market had increased 35.9%. So those who were waiting out the recession missed a lot of the early returns they needed to make back those early losses. So I don't know how bad this is going to get. A lot of people think we may have forgotten this by this time next year. I'm not sure that's going to be the case. You can't just stop the economy and then turn it right back on like a light switch. Once economic damage is done, it takes a while to recover. But whether this is extremely short-lived or if it takes a while to get through, my advice is not going to change. If you have a diversified portfolio, you need to stay invested. There's just no dependable way to know when the market will reverse course and move just as violently in the other direction. I also want to warn you that some investor fatigue will probably set in, especially if you consume a lot of the news, because there are always plenty of people out there to deliver gloom and doom. In a market pullback, they'll say we're in a recession. If we're in a recession, they'll say we're headed straight for a depression like we've never seen. And as you've already experienced in the past few weeks, fear sells, and the media is selling a lot of it right now. So turn it off for a little while. Ignore what's going on with the stock market. It doesn't have me worried at all, although I can understand why you may have concerns. So if you want to talk, you know where to find me. Stay safe, and I look forward to talking to you soon.